traders, my name is Timothy Hallberg. I'm a professional trader since 12 years back, been trading for a long time now, mainly in FX, but also commodities, crypto, you name it. This week I'm bringing you a weekly report for week number 10 of 2022 in collaboration with IMGFX, the people's broker. IMGFX is an online broker that lets you trade Forex, commodities, crypto, anything that you want to trade. They pretty much have it all, and I'm not going to go too much into it, but things just work at IMG. So I have a professional background in trading, so for me it's very important that my name is affiliated with a brand that I can trust. IMG is that brand for me. So if you are looking for a broker, I would highly suggest to jump in with them. But let's get into this market report. So we're going to talk about a plethora of different trading setups today. A bit of a different take on it, but we're going to start with the economical calendar for next week because we got some stuff coming up. So looking at next week, as you can see, Monday we start very slow, almost no news to focus on at all. Same for Tuesday, some Australian news late in the evening European time, but you know, I wouldn't put too much emphasis on this unless you are in actual Australian dollar trades. Wednesday, still keeping everything on the low, not much to do, but then we get March 10th Thursday, which is known as Super Thursday in the world of macroeconomics, because we start out with the main refinancing rates. It's basically the interest rates decision from Europe. So keep an eye out for that. We got an ECB press conference, and then at the same time we got some interesting inflation data points from the US. So they are kind of important to keep an eye out, and as they are being released at the same time that we get the press conference for Euro, if you are in, for example, Euro dollar, and just as an example, you get a very bullish ECB press conference, but you get a very bearish for the dollar CPI, or vice versa, obviously that can create very big moves in euro dollar. So keep an eye out for that. Definitely, even if you don't have trades, when it comes to inflation data like CPI, you want to keep an eye out on it because it's really moving the market these days. All of this with Ukraine and Russia, that won't be forever. So the main issue, or the main focus of the market before the Ukrainian war, was inflation. So that will be the main focus for the market, hopefully soon again. So keep an eye out for that. Even if you're not in trades with exposure to the euro or the dollar, I would highly recommend keeping an eye out on this, because you need to know the stance for the market. Heading into Friday, not that much. We got Canada with some news that could move the CAD. So pretty slow week except for Thursday. So if you're going to trade macroeconomics, keep an eye out for Thursday. Otherwise, the geopolitical tensions in Europe, in Russia, between Russia and Ukraine, will be the main focus. You know, a ceasefire, negotiations. As I mentioned in the last webinar, any good news the market would overreact, any bad news the market would overreact, any so-so news the market won't really care about. So keep an eye out for that. So let's jump into the charts, looking at Bitcoin first. So Bitcoin last week, as I said, we were really looking at Bitcoin from a perspective that we were getting mixed signals, both in Bitcoin and the leveraged tech stocks. Now we have gotten more decisive signals. So what I would be looking for right now is shorts. If we look at this chart, the weekly chart, as you know, I was looking for it to go long off of this move down here, and we could still do that on the higher time frame, but I would still look for another leg lower before we turn higher. So if you are a long-term trader, if you really like to trade on the higher time frames, then yes, the structure is still intact for the whole crypto pair. But most people like to trade the lower time frames also. So if we go into the 1 hour chart, what I would look for is this highlighted area right here, because we have some important moving averages coming into play right there, and so I would look, and percentage wise that would be a good pullback to enter short on. So anywhere from here, this is not a trend line, this is actually just the arrow that was on the higher time frame. Anywhere here I would like a short, and I would aim for these lower bounds here. Now as we get into these lower bounds, anything can happen. From here I would look for longs on the higher time frame, but on the lower time frame, shorts anywhere between say 40,375 and the highs of this range 39,639, somewhere around here. I would personally look to short it on the lower time frames. Next up we got gold. So gold is still highly relevant. As you know, last week we talked about trend continuation patterns, how you trade that, and why gold is still interesting. Gold had a pretty bullish run into the market close last week. If we go up on the daily chart, as you know, we have broken out of this structure here. I exited my long on this wick. Now we are back up, testing those higher bounds of gold. Now, as I mentioned before, there is still, from a macro perspective, there's still a strong case for higher gold prices, even before the whole Russia-Ukraine crisis. So obviously good news about the Russia-Ukraine war can push the pair down temporarily, but I would personally just view that as a possibility to get in on longs for the longer term. So once again, always in these webinars, these are not recommendations to do anything. It's just me running through my view on the markets and how I am looking to trade it. You should always make your own decisions, but hopefully I can assist you in the information of how I view it. So I have long trades looking to trigger on a break higher from here, and I am also long from this area right here, where we actually had a decent cluster support coming into play. So, you know, gold is really trading it in a way where, as I spoke about in the last video, with trend continuation patterns, just looking on the lower time frames to get your triggers, to get in on the longer trades. Because the only issue that I saw for gold in the long term right now with macro, from a macro standpoint, would be that Russia would be hit with sanctions, and that would make them maybe try to sell off their gold. They have a huge physical gold reserve, so they could maybe look to sell off that in order to offset the economical crisis that they are facing due to sanctions. But Russia has been hit so hard with sanctions that it's pretty much impossible for them to offload their gold in any larger manner at this point in time. So pretty much the only black cloud that I saw in the sky for higher gold prices, it's not really that relevant anymore. So I like gold higher in the short, in the medium to long term, even if the Russia-Ukraine crisis subsides, and I would look to get in on longs on pullbacks and momentum triggers on the lower time frames. So, okay, palladium. Now, XPD USD. What can I say? I spoke about this trade last week. I don't know if anybody took it, but I mean, hey, come on. It doesn't get more clear cut than this. Palladium has had a impressive bull run. As I said, in last week, Russia is the world's largest palladium producer. Now, if that supply gets removed from the markets and the demand stays the same, obviously that will push palladium higher. We opened the week with a pretty insane market gap to the highs. We didn't even fill that gap. So I mean, going long on when the market report was released on that Monday, somewhere around here, with just, you know, a stop against the lows and just a buy and hold on that would have made you seem 4 times your money, 4 times risk reward at this point in time. And it's the simplest macro trade that I've possibly ever seen in my life. Sometimes it doesn't get harder than this. So if you took palladium, good for you. If you didn't take palladium, then what are you doing? It was a slam dunk, easy to take trade, free money on the table. When there's free money on the table, you take it. Next up, NCD Swissy. So looking at the New Zealand dollar against the Swiss franc, I would look for a pullback anywhere into any of these MAs. We got the Kaufman adaptive moving average here. You got some very important EMAs down here. And I would simply trade this in a very simple manner. I would split my risk into 3. And I would first take the trade depending on how it reacts around the Kaufman. So if we pull back to the adaptive moving average, the blue line, I would look to take longs off that line depending on price action. If we just break through it and close below it, not respecting it, then obviously there's not a long trade there. But if we start, you know, as we have done here, bouncing around it to then move back up, not being able to close below it, that's a bullish indicator. So when it comes to the Kaufman adaptive moving average, the blue line, when you get this type of price action that we have here, where you're bouncing off it, not being able to close below it, that's a very bullish signal. So I would look for that price action. If I don't get it there, I would look for price action into the white line here. And if we don't get there, I will look for price action into the yellow line. Even if I get triggered on the white line, I will still add to that position at the yellow line, because my total position risk won't be complete until I have 2 or 3 trades in this pair, and I just get a better entry down here with a tighter stop loss. So I would look to enter up here, I would look to enter around here, and I would look to enter around here. Stop loss against the previous swing lows, meaning down here for that one, this one below there, and this one would be very tight, and depending on price action, against these lows or these lows pretty much. Hope that makes sense to you guys. Next up, euro dollar. So euro dollar, looking for shorts. If we go on the higher time frame, this area is interesting down here, because if we go on the weekly chart, this block support could be a good aim on a lower time frame. Same thing here, looking for a pullback, preferably around this resistance area up here, because as the week progresses, we will have the moving averages coming into that too. So any kind of shorts into this area right here, I think is really interesting, aiming for this area right here. Depending on where we get it, you know, stop loss against the previous swing highs, so somewhere around there, somewhere down here, you could easily get 2 to 3 risk reward on such a trade. I think it's a good one. Hopefully it plays out. Maybe it does, maybe it doesn't, but we'll have to see. Next up, pound yen. Looking to short pound yen. Once again, same kind of structure, same kind of pullback trade that I'm looking for. If we go on the higher time frame, as you can see, this kind of daily cluster support down here is what I'm aiming for. I would go on a lower time frame looking for a pullback, either into this first level right here, which is based off of the previous bounce there, and the Kama, the Kaufman adaptive moving average, and then moving anywhere up into the more long-term moving averages, normal moving averages, would also have me looking for interesting trades in either way. Looking for a trade around there with a tight stop loss could give you a good 4 times risk reward. Looking for trades up here into the moving averages with a stop against the highs could have you looking at somewhere around 3.5 risk reward. So it's also a attractive trade from a risk reward perspective. It's just pullback trades, and it's the same kind of thing as the other ones. So lastly, Australian dollar against the Canadian dollar, looking for longs. Same thing, same kind of setup as the previous one. As you know, I spoke about this currency pair when the Russia-Ukraine crisis began, looking for it to pull back up into this structure and then move lower, but we never got that. Instead we broke out, so this kind of trade is invalid to the downside at this point in time. My miscalculation in that from a macro point of view would be in the demand from the world for commodities right now, and making commodity currencies rally really good. So the Australian dollar, it got removed pretty much as a risk proxy and instead became a commodity proxy. So from that point of view, you know, it's all about sentiment. What does the market focus on? At this point in time, the market is focusing on commodities and not the risk proxy for commodity currencies. So you just gotta adapt to that quickly. So we broke out of this and looking for continuations to the upside. Any kind of pullbacks makes this one interesting. We are pretty stretched already. We are far away from the moving averages, so this one would really have to watch how it reacts around the moving averages as it comes down. I would probably face this as I would like to watch it pretty much respect the moving averages. I wouldn't care about the Kaufman moving average on this one. I will watch them how price action respects these moving averages, and if it does, I would start looking for triggers into the lower time frames on divergence. For example, we got a pretty amazing bullish divergence triggering here. If you would have taken that trade as a continuation trade last week with a tight stop loss against the previous range, I mean, we're looking at a 3.6 holding risk reward at this point in time. So any kind of pullback in this, it's stretched, so I wouldn't jump in at these tops. I would look for a pullback and then jump back into it. The fundamentals are supporting this trade too. So yeah, to sum it up, you know, Bitcoin looking for shorts, gold looking for longs, palladium looking for longs, but you know, should have been in last week. Looking for longs in NCD Swissy, looking for shorts in Eurodollar, looking for shorts in Pound Yen, and looking for longs in Australian dollar against Canadian dollar. So yeah, if you like this guys, leave me a like on the video. If you did take the Palladium trade last week, would love to hear that in the comments. If you didn't, would love to hear why also. So you know, let's get some engagement going, and hopefully we get a good profitable week for everyone. Take care guys, bye.